Okay, so you'll hear the government refer to the words good and bad debt. So when the words good and bad debt are very similar to the words capital and current expenditure. So they're referring to capital expenditure as spending that's going to help boost our productive capacity going forward, and therefore that's considered good debt, whereas debt that's used for spending related to current expenditure. So if it's spending on public service wages or welfare and transfer income or another form of government expenditure that would be considered bad debt, but it's not necessarily current expenditure. If it's spending on public service salaries, wages, things that are not going to provide a long-term benefit to the economy, then that would be considered bad debt for the economy. The government now includes another figure called the operating budget outcome, which basically excludes all capital expenditure. So the idea of the operating budget outcome is it includes all revenue minus all current and transfer expenditure. It takes away the amount of capital expenditure to give us a better indication of, whether we're overspending on sort of current and transfer payments, because we're happy to go into debt for capital expenditure, but if we have a large operating budget outcome, then that's a big concern for the budget, because way too much money is going towards current expenditure. Way too much money is going towards welfare, towards public service wages, etc. The government would accept a large budget deficit if it was caused because of capital expenditure, because that's going to provide benefits for the long term. So in 2017-2018, the operating balance was $19.8 billion deficit, where the underlying cash deficit was $29 billion. So there was around $10 billion spent on capital expenditure, and therefore the net operating balance was lower. By focusing on this figure, it gives the government a little more freedom to invest in areas without having to worry about the deficit, so they can spend more money on these productive things like building roads and railway and infrastructure without it actually worrying about how it affects the operating budget outcome. So it gives you gives them more flexibility to implement a lot of these expansionary policies. So that this will be a figure that will be used more and more in future budgets to get an idea of the overall strength of the budget. So the budget deficits are not necessarily a bad thing, as long as that money is going towards capital investment and things that are going to boost our productive capacity, rather than just day-to-day running costs. The key difference between the net operating balance and the underlying cash outcome is that the underlying cash outcome includes net capital investment, where the operating balance does not. The $9.4 billion difference this year is because of the fact that the net operating balance doesn't include that capital expenditure. It gives the better indication of whether the government's spending beyond its means. They're less likely to be concerned about an underlying budget deficit, the government, if the net operating cash is in surplus, because that means that the current expenditure is not too high and is therefore less of a concern. Just a quote from the government, the RBA saying that it's important that our public finances are on a sustainable track, that there's a better balance to be established over time to ensure that we're not overspending on current areas, basically. We need to be focusing our spending on infrastructure spending that's going to help promote revenue in the future. Thank you. We'll look at just one couple of questions here. Explain the link between government budget deficits and government national debt. You need to articulate this clearly, which means that budget deficits by definition mean that budget outlays exceed budget receipts for the next 12 months, which means the government needs to borrow money, which they generally do by issuing securities or bonds. This will then lead to increased public sector debt. So make it clear what the budget deficit is, that spending exceeds revenue, and then explain clearly that that means the government needs to borrow to fund that deficit, which will then accumulate to increased government debt going forward, or national debt. Why might a legacy of debt affect living standards? Some of the things you could talk about here is that it may put an unhealthy burden on future taxpayers, so they may have to pay more tax. It may mean that the government needs to reduce welfare spending in the future. There's also going to be more money spent on servicing the debt, so there'll be higher interest repayments, which may mean there's less money available for other types of things, or the opportunity cost may be that we can't spend that money on education or infrastructure, which would mean that there'd be so much money, which means that there would be so much, which would mean that they would have less money for spending on productive areas, which are going to hurt our economy going forward. Economic implications, if the deficits continue till 2023-24, may be things like gross public sector debt will increase, which means that taxes may increase in the future. So they'll have insufficient funds available for infrastructure programs and things like that in the future. It may hurt our AAA credit rating, which means that we'll be paying more for future debt. They will have less of a buffer available to respond to future economic crises, so the government may not have the money to fuel the economy in the future, like they were with the debt when they were debt-free before the GFC. And they're probably the main ones that you could focus on for that question. Thank you.